Very good morning, everyone. Welcome back to the current affairs classes. I hope you all are doing well and the audio and video is all good. So today we are going to discuss the news from 17th to 18th December, and this is going to be in part 1 and part 2 because we have a lot of news in this PDF and a lot of SEBI guidelines coming out there, proposed changes, etc., which will take time to analyze, right? So it's a bit technical, will be taking some time. So it will be done in part 1 and part 2. Part 1 is today. Let's begin with the ESI finance and business news category. Also stay tuned and stay focused today because a lot of SEBI related news and changes are coming which are very, very important. So try and understand them. The facts as well as the conceptual clarity is important today, right? So 17 to 18 December, part 1. First one which we have is the CBIC, Central Board of Indirect Taxes and Customs. CBIC has launched 4 new initiatives. How many? 4. So CBIC recently has launched these 4 new initiatives to ease out the process of taxpayer for the taxpayer, or to make the taxpayer services more easy, right? To streamline and ease out this process of taxpayer services. What are these 4 citizen-centric initiatives? First one is revised citizens charter. Remember all of them, right? So first one is revised citizens charter. What is this revised citizens charter? This is updated charter. It basically includes areas like drawback in management of custom duties, import export, right? It incorporates feedback for improving the ease of doing business via the taxpayer services, ensuring more responsive and accountable tax delivery system. So it calls for public feedback. How can the taxpayer services be improved more and be streamlined? Also efficient management of your indirect taxes like basic customs duty, etc. Right? So this is revised citizens charter. Next one is ease of doing business tab. So they have created a separate tab known as ease of doing business tab, which is a platform where your taxpayers they can submit suggestions as to how ease of doing business can be improved further with the improvement in the taxpayer mechanism, taxpayer services, right? So this is the thing. Third is revamped citizens corner. Third one is revamped citizens corner. This is an again online portal. This is again to enhance the services and improve the tax related information, right? So revamped citizens corner basically is facilitating the taxpayers with more comprehensive knowledge and understanding of all these tax related procedures, laws, rules, etc., right? So that they can comply with them and then they can comply with the regulation and understand the entire process. Then CBIC archives. CBIC archives, they will showcase the historical development of indirect taxes in India. How the indirect taxation regime as it is in the present form has gained its form over the period of time, right? So these are the 4 key initiatives. CBIC, you all must be knowing, CBIC is Central Board of Indirect Taxes and Customs. It is a part of Department of Revenue Department under Ministry of Finance. It formulates your policies regarding levy and collection of indirect taxes like customs, right? Central excise duty, central goods and services tax, IGST, etc. So this is the thing. I hope this news is clear. Everyone, remember these 4 initiatives, right? This much is more than sufficient. Then next very important thing coming is multi-factor authentication, MFA. Multi-factor authentication for using updated versions of the e-way bill and e-invoice systems for all the assessees now will be mandatory for all taxpayers from April 1, 2025. So from April 1, 2025, MFA is going to be mandatory if you are using updated versions of e-way bill and e-invoice. So first of all, what is MFA? Multi-factor authentication. MFA basically involves various number of layers of authentication, right? Apart from the traditional method of OTP and all only, which is one-time method. So MFA involves layers of verification. This is to ensure security, right, of the underlying transaction or the underlying service like this. So multi-factor authentication is the number of verification layers, security feature is, right? So MFA now will be mandatory for e-way bill and e-invoice for all the taxpayers from April 1, 2025, remember. Also, there will be new provisions for restricting generation of e-way bill. Now, if you see the timeline, 1st January 2025, say 1st January 2025, MFA will become mandatory for taxpayers with their aggregate annual turnover exceeding rupees 20 crore. Remember this thing. Okay. Their aggregate annual turnover. So, taxpayers whose aggregate annual turnover in GST is a term which includes and deducts the services, you have delivered, whatever deductions have to be reduced, calculating all these things and then giving out your entire turnover, right, from the supplier side. So this is aggregate annual turnover. If you are a taxpayer and your aggregate annual turnover, the supplier, exceeds rupees 20 crore. How much? Remember, rupees 20 crore. Then 1st January 2025, MFA will become mandatory for you for e-way bill and e-invoicing thing. Then February 1, 2025, say MFA will become mandatory for those with their aggregate annual turnover exceeding 5 crores. And April 1, 2025 for all the taxpayers and users. So they are implementing this in a phased manner so that these suppliers or taxpayers, they get enough time to comply with this and their activities do not get disrupted. So this is the thing, right? Already MFA is mandatory for taxpayers whose annual aggregate turnover is exceeding 100 crores, but now they have also reduced this to enhance the security of such services or supplies. Okay, so 20 crores say now it will be mandatory, and then gradually 5 crore will also come under this mandatory MFA. No. Then e-way bill and e-invoice you must be knowing, but still let me discuss with this thing with you. So e-way bill is basically generated when you transport goods by motor vehicle. Okay, so this is required when the value of goods being transported exceeds rupees 50,000 as of now, right? So if the goods you are transporting, the value exceeds by rupees 50,000, more than 50,000 is the value, then you have to have this e-way bill. This is to ease out the process. You don't have to show other bills while the transportation process, right? And then e-invoice. E-invoice is basically again an invoice which is required for businesses with yearly turnover exceeding INR 5 crores. Okay. It will have proper details like supplier detail, buyer detail, the item description, what you are transporting, the tax amount, etc. So e-invoice is a transaction detail, right? It is required when your turnover exceeds 5 crore. Remember, an e-way bill is required when it exceeds 50,000 rupees of the worth, 50,000 rupees of the goods transported. I hope e-way bill and e-invoice are clear to all of you. So this was the news. Then next one. This is something not so much important. You can just go through it. GMR Sports Ventures, which is part owner of the Delhi Capitals cricket team, it has refinanced 1,000 crore of debt through Abu Dhabi Investment Authority. 1,000 crore of debt has been refinanced. What is refinancing? Refinancing is basically you are trying to replace the existing loan with a new one, right? With new set of interest, which might be lower than the previous one. So this is refinancing. This much is relevant. Other things are not important here. Then you have Tata Steel. Now this can be important. Tata Steel has operationalized an all women shift So this is India's first, remember, it can be important because India's first all women shift in your Naumundi iron mine in West Singhbhum district, Jharkhand, right? So Singhbhum is a region famous for iron ore and coal, you must be knowing. So first all women shift has been operationalized by whom? Remember, by Tata Steel in the Naumundi iron ore in West Singhbhum. Okay, this is first such in the country. All women mine is going to be there. Then you have Nuclear Power Corporation of India has raised 4600 crores through 15-year bonds at a coupon rate of 7.14%. So NPCIL basically is in news. So static portion can be important. It is headquartered in Mumbai, and of course founder is Government of India. Present CMD of NPCIL is Bhuvan Chandra Pathak. Okay. Then Rural Electrification Corporation Limited, REC, has raised 2,195 crores through bonds of different maturities. So it has also raised this good amount of fund. That's why REC is also in news. So what is REC's current status as a classification of the company? If you say it is a Maharatna, it is a Maharatna company. This is something you should be remembering. REC is a Maharatna company. Okay, under Ministry of Power, Government of India. Then government has realized 8,625 crore through various minority stake sale divestments or disinvestments, okay, in the current financial year 24-25. So this figure you can remember, 8,625 crore government has raised, via which the process is various minority disinvestment. What is minority stake sale disinvestment? Minority stake sale disinvestment is when you have disinvested only minority of your stake. So you are retaining your majority stake. You are retaining your majority stake means generally 51% of the stake, right? So via minority stake sale only it has generated this. Now moving on to the regulatory bodies news segment. This is going to be very technical and very important as well. So I will be trying to explain you all these concepts in the most easy and practical method. So stay tuned and focus, right? First, in the regulatory bodies segment, you have SEBI board meeting which was held on 18th December 2024. In this board meeting of the SEBI, new decisions have been out, right? So they have changed a lot of things. They have introduced new regulations enhancing investor protection and market integrity. Let's see what are these new regulations. So first, in the SME IPO category, SME, small and medium enterprises. So they have changed the guidelines for SME IPO, right? What are the details? Now, it is mandatory for companies, all the companies planning to tap the SME IPO market to show operating profits of rupees 1 crore in at least 2 of the last 3 financial years. Okay. So if you are planning to invest in an SME IPO, this means what? If you are planning to tap the SME IPO, you are planning to invest in SME IPO, you have to have operating profits of at least rupees 1 crore. Remember, rupees 1 crore in at least 2 of the last 3 financial years. Okay. In at least 2 of the last 3 financial years, your operating profit should be 1 crore. I hope it is clear, everyone. What is operating profit? Operating profit is basically the profit, the net revenue which you generate from your core function, right? Core operations. This is first thing. 1 crore, remember. Then, if you are a promoter, right? So all the promoters and other major stakeholders who are selling under the offer for sale in IPO, it has been capped up to 50% of their holding during the IPO. What does it mean? It means, what is offer for sale first of all? OFS. offer for sale is basically a mechanism which provides the shareholders to sell out their shares to the public via a stock exchange. Is this clear? Right? What is this offer for sale? Selling your shares via stock exchange to the public. So it helps basically maintain the minimum holding requirements, right? So it has kept that only up to 50% of your holding of the IPO you can sell under offer for sale, okay, in SME IPO. So in SME IPO, you can only sell via offer for sale platform 50% of your holding of the IPO. These two things are there which are very, very important, right? Third thing is allocation methodology. Allocation methodology for non-institutional investors in SME IPO is to be introduced, okay? Is to be aligned with methodology used for NIIs in main board IPOs. What does it mean? So basically the methodology for allocating such shares, methodology which they are going to use for allocating such shares is going to be aligned with that of the methodology used for allocation to the NIIs, non-institutional investors in the main board IPOs. Now, what is this going to be? It is going to be a lottery-based method. Just understand this thing, okay? It is going to be a lottery-based method, making it more transparent. This is the entire thing. The allocation process of this IPO is going to be, okay? So, allocation methodology will be now a kind of lottery basis. So, this was the first category. I hope all of these three details are clear to you, right? Next category, review of merchant banker regulations. Merchant bankers. So, merchant banker regulation they have also revised. Merchant bankers, who are merchant bankers? These are financial intermediaries, right? Financial intermediaries, any financial entity working as a financial intermediary, they perform a lot of activities, permitted activities like managing public issues, okay, underwriting the securities, providing advisory services related to securities, okay. So merchant bankers, other than the banks, public financial institutions and their subsidiaries, they will undertake only permitted activities. This is the new thing. Such merchant bankers, but remember, other than the banks, public financial institutions and their subsidiaries, other than these, all other merchant bankers, they will be carrying out only the permitted activities now. If they want to indulge in any other activity, they need a proper approval from SEBI for that, right? This is clear. So what are these permitted activities? These are the permitted activities like managing the public issues, like underwriting the securities, providing advisory service on the securities, etc. Portfolio management, valuation of securities, right? These are the things. Other changes in the merchant banking rules is maintaining a liquid net worth of at least 25%. Remember, maintaining liquid net worth of 25% of their minimum net worth requirement at all times. So all time you have to maintain at least 25% of the minimum net worth requirement in the form of liquid net worth. Okay, this 25% has to be there in liquid net worth. So what is this liquid net worth? Liquid net worth is basically in the form of cash or cash equivalents, right? Cash and cash equivalents, liquid net worth. Reducing your liabilities, whatever cash and cash equivalents you are holding, deducting all your liabilities. This will show your liquid net worth, has to be 25%. So this was about the merchant banking regulation changes. I hope it is clear. Moving on to the third category. Third category is relaxation in ESG reporting. Relaxation in ESG reporting. So SEBI has relaxed certain norms related to ESG reporting. ESG is what? Environmental, social and governance reporting. Okay. What is the relaxation? That this now, this mandatory reporting, it has now been deferred by 1 year. So 1 year deferment has been there. Up to financial year 2026, it has been deferred. Okay. Until then, it will be voluntary. But when it becomes mandatory in financial year 2026, all have to do that, right? So what is this? Remember, it has been deferred by 1 year. Until then, it will remain voluntary, but then in 26 financial year, it will become mandatory. What is this ESG reporting? Environmental, social and governance reporting is mandatory for such companies. SEBI basically monitors their environmental performance. What impact do you have on the environment? Social reporting. What are your relations with your clients, with customers, employees, etc. Right? And governance. How is your internal functioning happening? Right? Is it ethical or not? All these things are monitored and ESG reporting is associated with this. I hope it is clear. Moving on to the next category. Simplified debt listing rules. So SEBI has also eased norms for listing debt securities like your bonds, etc. Right? Easy norms for listing such debt securities. What does it mean? So basically, they have mandated that the listed debt securities and to be listed debt securities have to be there. Their issuance and their transfer has to be there only in the demat form or the dematerialized form, which is the digital form, right? So this is to simplify the process, make the process online and ease out the process. All the debt securities like bonds, equity shares, right? It has to be like bonds, right? So debt securities have to be listed. Their issuance, their transaction have to be done online. I hope you all are catching up with me. Everyone, yes or no? Right? So we are trying to understand this in as easy manner as possible. If you still have any doubt, you can ask me. Next category, strengthening corporate governance. Strengthening corporate governance. So SEBI has also introduced stricter rules to enhance corporate governance standards in such companies. How? What does it mean now? It means companies, they will need to disclose more details on their related party transactions, right? The use of their funds which they are raising from the market, ensuring greater transparency for the investors. They will have to detail out SEBI on these things or the public, right? So they will have to disclose more of information now. Then amendment to mutual funds norms. SEBI has also approved amendments to the rules that specify the timeline for deployment of funds collected by mutual funds in the NFO. What does this mean? What is NFO? NFO, the new fund offer. NFO is basically IPO of the asset management company. So basically NFO is like an IPO which of an asset management company by which they try to introduce a new mutual fund in the market. This is NFO, right? You are introducing, as an asset management company, you are introducing a new mutual fund in the market via which you raise your fund, right? For deployment of such fund raised via NFO, the timeline has now been reduced. Earlier it was 60 days, now it is 30 days. 30-day timeline, remember. Okay. 30 days timeline is provided for deployment of such funds raised via NFO. This is the thing. Remember, it has been reduced to 30 days. Earlier, it was 60 days. Then regulation for startups. SEBI has also relaxed the eligibility norms for startups listing on the Innovators Growth Platform of NSE. So this IGP, you must be knowing, Innovators Growth Platform. IGP is an exchange launched by SEBI for listing of the startups and innovative companies in India, if you see, right? Providing them a separate platform to be listed. The startups, the companies associated with innovation, okay, IGP of the NSE. So it has relaxed the eligibility norms for startups listing on this IGP platform. What is the relaxation? Startups will now need only 25% of their pre-issue capital to be held by qualified investors to be listed. Okay. Only 25% of your pre-issue capital. What is pre-issue capital? Pre-issue capital means whatever capital you have held before the issue or before raising the fund via the issue, right? So only 25% of that to be held by qualified investors, and then you will be eligible to be listed on this IGP. Okay. I hope it is also clear. Then next is AIF, Alternative Investment Funds के लिए they will now need to provide more detailed quarterly disclosures on their investments, their valuations, performance, right? So that investors can track their money efficiently. AIFs are what? AIFs are basically private investment vehicles. They pool the money from high net worth individuals, high net worth, right? And then they invest in alternate funds like your commodities market, hedge funds, etc. Lot of options are there. So this is the thing. I hope all these 8 categories and their associated detailed changes are now clear to all of you. Moving on to the next section, again coming from SEBI. So SEBI has also extended the suspension of derivatives trading in 7 agricultural commodities. Remember, how many? 7 agricultural commodities. So in the commodity market, SEBI has suspended derivative trading like futures and options in certain agricultural commodities, right? It has extended such suspension. So now the suspension, the ban on the futures and options or derivative trading will continue on 7 agricultural commodities. What are these 7 agricultural commodities? Remember them, right? So it has now been extended till 31st January 2025. The ban will be there, right? 7 agricultural commodities which are in the list are paddy, non-basmati rice, paddy, rice, non-basmati, wheat, chana, mustard seeds and its derivatives, soya bean and its derivatives like oil, etc., crude palm oil and moong. These are the, moong is the dal, right? Pulse. 7 agricultural commodities, remember. These are the 7 agricultural commodities. Why? Because excessive speculation happens and volatility happens with the derivatives trading in these agricultural commodities. Now you see recently food inflation has been higher. To curb the rising price level and the impact of excessive volatility in these commodities, this decision has been there. I hope it is clear, right? Then next one, SEBI has also launched a new website for the Association of Registered Research Analysts of India, ARRAI. This new website has been launched for the Association of Registered Research Analysts of India. These Registered Research Analysts of India, they represent the interest of SEBI registered research analysts. They play an important role in the research associated with the securities market, providing informed and authentic information and R&D in this regard. So remember, new website has been launched for them. They are SEBI registered proper research analysts, right, in the securities market or financial market. Then next one is SEBI has mandated that any person wishing to give investment advice must be qualified and registered under Investment Advisor Regulations Act 2013. Okay. So this news is coming from the recent developments, you see, now on YouTube nowadays or other social media platforms like Instagram, etc., every person, every second person is providing you financial advice, right? Now, how do you judge that advice is legal? They are really qualified. So, SEBI has said that if you want to provide any such investment advice, you must be qualified and registered under what? Under the Investment Advisor Regulations 2013. Remember this, IA Regulations 2013. Okay. Also, certain detailed aspects, if you see, such investment advisors who want to provide such advisory, provide such advice, if they use artificial intelligence tools, AI tools for their services, they then will be solely responsible for security, confidentiality, integrity of the client data, use of any other information, investment advice based on the output of such AI tool, and compliance with any law for the time being in the force. If you are using any AI tool for providing such an advice, you will be liable for all these things. Okay. It also has mandated that such investment advisors, they need to disclose the extent of the use of AI tools in providing such advice. How much AI tools you have utilized in providing such advice under Regulation 18 of this Investment Regulations 2013, okay, to the clients. You have to provide this information to the clients. And your minimum qualification for becoming such investment advisor is graduate. Okay, graduate, minimum qualification. Otherwise, you will be banned. Like recently, one YouTuber was banned. I don't remember the exact name, but that person has been banned, right? Then individuals who are registering themselves as investment advisors, whose number of clients exceed 300. If you are an individual investment advisor and your number of clients exceed 300, it was earlier 150, now it is 300. Remember. So remember these changes, right? If your number of clients exceed 300 at any point of time, or the fee collected during the financial year exceeds 3 crore rupees, whichever is earlier. Okay. So they will be coming under this regulation. So this has been the limit. And for part-time advisors, you can have 75 clients. This is the limit, right? So remember, if you can have either 300 clients or the fees collected in the entire financial year, 3 crore rupees, if it is exceeding, whatever is earlier will be the cap for you, will be the limit for you. You cannot go beyond that, right? This is to ensure that you are not leveraging your position as an investment advisor in the market, right? So 300 clients, either 300 clients or 3 crore rupees exceeding the total fee collected in the financial year, whichever is earlier will be the cap. If you are a full-time investment advisor, if you are a part-time investment advisor, the number of clients which you can have is 75. Remember this. Right? So then SEBI has also notified a new asset class between portfolio management services and the mutual fund, right? So to manage this gap between the PMS and the mutual fund, portfolio management services and the mutual fund, SEBI has introduced a new asset class. The name is Specialized Investment Fund, SIF, Specialized Investment Fund. What is Specialized Investment Fund? This asset class will be accepting a minimum amount. So you have to invest a minimum amount of rupees 10 lakhs. So this is catering to high net worth individuals, right? Since minimum amount only is rupees 10 lakh, this is not for the common people. So this is the new asset class underlying, having features in between the PMS and the mutual fund. Okay. Remember, the minimum amount will be rupees 10 lakhs. minimum amount will be rupees 10 lakh. Okay, 10 lakh rupees. However, this is not going to apply minimum investment requirement, not going to apply to an accredited investor. So this is to fill in the gap between mutual fund and PMS. As I told you, it will be offering you flexible and specialized options for investment. But of course, since it is riskier, so you have to be risk resilient, right? If you can absorb the risk. Also higher returns, but then higher returns, they come with higher risk. So this is the thing. Also, the fund manager of such SIFs, specialized investment funds, remember, fund manager of such SIFs, they will be required to have relevant National Institute of Securities Market certification. This National Institute of Securities Market provides you certification of your expertise in the financial market handling, working as fund managers, right? Providing information, advisory, all these things. For that, professional advisory, professional services in the financial market, it provides you certification. Also under this new SIF category regulations, it restricts investment such as investment strategy that cannot invest more than 20% of its NAV in the debt instruments. So you cannot invest 20% of your NAV in the debt instruments, right? Comprising your money market instruments and non-money market instruments. Remember, how much is the limit? 20%. I hope it is clear, everyone. Right? So remember this 20% that under this SIF regulation, you cannot invest more than 20% of your NAV in the debt instruments. Debt one, okay. And NAV, net asset value, you must be knowing. NAV is basically used for tracking the performance of the mutual fund, right? NAV basically shows you the performance of the mutual funds. Whatever say amount of your securities you have, or the market value of the securities you have, divided by the number of units of that security. So basically it gives you how much your mutual fund is performing well, right? The amount of your security divided by total units out there, it gives out the performance of the MF. Out of that, 20% only you can invest. I hope it is clear. Also, these SIFs, they can also invest in the REITs and InvITs, the Real Estate Investment Trust and the Infrastructure Investment Trust, right? They can also invest in the REITs and InvITs. So this has a broader scope. What are REITs and InvITs? These are again investment vehicles. REITs, they pool these funds to invest in the real estate properties. So basically investors can own the real estate properties without physically owning them, right? And invest in them. InvITs are the trust investment vehicles. They raise these funds from the investors and they invest in investment projects like bridges, roads, other infrastructure, etc. And then it invests. So you can also invest in REITs and InvITs. The next one is SEBI has tightened rules on the issuance of offshore derivative instruments by FPI. Okay, offshore derivative instruments by FPI. It has tightened the rules under this. What does it say now? It says FPIs will not be able to issue ODIs with derivatives as underlying asset. Okay. FPIs will not be able to issue ODIs with derivatives as underlying. What does it mean? Before understanding this news, you will have to understand what is this ODI. Only then you will be able to understand the news. So you see, these offshore derivative instruments. So first thing you must be knowing that FPIs or FIIs, if you are a foreign FPI or FII, you want to invest in India, right? Directly investment is not possible if you are not registered with SEBI, right? Under certain categories. So what happens is, when you are not registered with SEBI, try and understand this thing. When you are not registered with SEBI and you want to invest still in the Indian securities market, you can do that with the help of ODI, okay? Offshore derivative instrument. So what you do is, suppose there is a foreign investor who is not registered with SEBI, wants to invest in the securities market. So this foreign investor approaches one FPI or FII who is registered with SEBI, okay? Approaches this who is registered with SEBI. Such foreign investors, they approach portfolio investors or institutional investors who are registered with SEBI. Now what they will do is, they will invest on the behalf of this foreign investor, okay? They will invest on the behalf of this foreign investor and will issue ODI against it. Will issue ODI against it. Have you got this point, everyone? And then will issue ODI against it. This is how this ODI works, right? Okay, clear? So this is the thing. Now moving back to the news. Now what SEBI is saying, SEBI is saying that FPIs, they will not be able to issue ODIs with derivatives as underlying. They will have to have actual securities. You can only issue such ODIs if you are having actual securities underlying this, right? So when that registered FI or FPI issues that ODI, it has to be against actual securities like your bonds, like your government securities, okay, equity shares, actual securities, not the derivatives. This is the thing. Remember, FPIs will not be able to issue ODI with derivatives, but it has to be actual securities, as I told you. I hope this news is clear now. Also, if such ODI subscribers having more than 50% of their equity ODI positions reference to securities of a single Indian corporate group, and subscribers having equity positions worth more than 25,000 crore in the Indian markets, they will be subject to additional disclosures, okay, additional rules. You need not remember this one, just remember this thing, that derivatives as underlying security or FPIs cannot be issued, FPIs will not be able to issue ODIs with underlying derivatives. They have to be issued with underlying actual securities, I have told you, like shares, like bonds, right? Government securities, equity shares, etc. Now, I hope this news is clear. You can catch from this. The next one is, SEBI has proposed a new platform for investors to track their inactive or unclaimed MF folios. What is this new platform? This is called as MITRA, SEBI MITRA, okay? MITRA, I think this was asked somewhere when it was in news. So anyways, this is going to be very important, the full form as well, and the associated who has launched this question becomes important. You see, recently in IRDAI phase 1, they have asked you this kind of question, right? So this is going to be important. Remember, what is MITRA? MITRA is the platform named Mutual Fund Investment Tracing and Retrieval Assistant. MITRA is Mutual Fund Investment Tracing and Retrieval Assistant. Okay. Remember this full form, Mutual Fund Investment Tracing and Retrieval Assistant. Now this can be used by investors to track and identify their unclaimed mutual folios. What are these unclaimed mutual folios? Say you have not been active on your MF account, you have not redeemed or encased your dividends, etc. All these activities you have not done for quite long period of time, almost 10 years, then you can track that via this platform, MITRA. So this will ease out the process for the investors seeking a proper tracking of such accounts. And you can also remember this thing can be important. RTA's Computer Age Management Service, CAMS, and KFine Technologies, they have developed this SEBI MITRA. Please remember MITRA. Then you have NSE. NSE has implemented a new reversal trade cancellation mechanism. Okay. NSE has implemented a new reversal trade cancellation mechanism, RTCM. What is this reversal trade cancellation mechanism introduced by NSE for its equity derivative segment? Basically, this is going to identify and cancel trades which are trying to create artificial volume in the market and affect the prices of such securities. Let me give you an example, you will be understanding this, right? So, two clients are engaged. Now, what happens is you are trying to influence the market by creating artificial volume. It is not being traded with that much of volume, but you are trying to create it, right? So, let's take an example here. Suppose there's this client A and client B. Okay, this client A has sold out securities to client B, and then the client B has again sold the securities in turn to client A. What they are trying to do via this process, they are trying to create artificial volume. असली में तो trade हुआ ही नहीं, right? You have sold this to client B has sold it again to you only. You have just created volume in the market to influence the price of the assets or securities. So under this new rule, NSE will be doing what? This second transaction, it will be cancelled, right? So when client A has sold this thing to client B sells it out again to client A, the second level of transaction will be cancelled. This one, when client B is selling out again to client A. This reversal of the sale securities, it will be cancelled. The second one, when B sells it again to A, the original one. I hope it is clear, everyone, right? So the second level of transaction will get cancelled. This is what we were discussing. The reversal trade cancellation mechanism, right? So NSE has implemented it, reversal trade cancellation mechanism. I hope it is clear. They will identify and cancel such trades, okay? And it will help them monitor trade on intraday basis, trigger cancellations if certain thresholds are breached. This is to maintain equal opportunities, transparency and efficiency in the market. No, we are not discussing RBI circulars in this session. Okay. We are not discussing RBI circulars in this session. These regulatory bodies we have all the news coming from SEBI. Okay. RBI circulars will be discussed in separate classes. So moving on to banking news. Before I move on to banking news, tell me all these regulatory bodies news are clear, right? So banking news first you have is HSBC India and Indian Hotels Company. They have come together to launch HSBC Taj Credit Card. HSBC Taj Credit Card. This is India's first premium co-branded hospitality credit card. Okay, co-branded hospitality credit card, and this is for someone who seeks luxury, for luxury hotels, etc. So it has been launched in collaboration with Visa. Remember, collaboration with Visa. Then the SEBI has banned YouTube influencer Ravindra Balu Bharti. As I was telling you, this was the name, Ravindra Balu Bharti, influencer, financial influencer advisor, and his company from dealing in or accessing such securities market until 4th of April for unlawful gains which you have made via this, right? So this is the thing. Then next you have RBI lifting business restrictions imposed on two companies of the Edelweiss Group. You see, Edelweiss Group pe certain bans were imposed by RBI, right? So the ECL Finance and Edelweiss Asset Reconstruction Company, it has imposed certain bans. Now it has lifted. Okay, what were the restrictions? ECL Finance may they asked it to stop any transaction, and Edelweiss ARC they have paused. You cannot acquire any further financial assets, right? But now it has lifted all these bans. Then you have Bajaj Alliance General Insurance, Bajaj Alliance. It has introduced two motor insurance add-on covers. So these are add-ons in the existing motor insurance provided, right? What are these add-ons? Eco Assure, which is providing you repair protection. Whatever repair is required for the underlying motor vehicle, repair protection is also being provided, because repair is also a cost, right? And high maintenance vehicles are there. So Eco Assure will provide you repair protection, and named driver cover. Remember these two things. Now this is very innovative. Bajaj Alliance is providing you innovative insurance cover catering to the contemporary demand of the society, right? First is EcoAssure, repair protection, repair amount, whatever it will take. Next is named driver cover. Now sometimes what happens is vehicle is owned by you, but someone else, for example your driver or your relative, someone else is driving that vehicle, right? In that case also you will be insured, or that vehicle will be insured although you have purchased it, right? So named driver cover may, whosoever is driving it, still you will be insured. This is the thing. This is Bajaj Alliance add-on cover. Then next you have the Standard Chartered Bank India has launched FEMA Center of Excellence, Foreign Exchange Management Act Center of Excellence by Standard Chartered Bank India. What does this FEMA Center of Excellence will do? It will help the clients navigate and comply with the regulatory requirements and understanding the regulatory mechanism regarding FEMA. Okay, so this is a self-service capability, is going to introduce a self-service capability to optimize such cross-border payments. Okay, you can access information, you can access what are the present norms and regulations regarding Foreign Exchange Management Act, so that the cross-border payments can be facilitated. Then next you have is LIC has unclaimed maturity amounts totaling 880.93 crore in 23-24 financial year. Okay, what is this unclaimed amount? It means that the policy holder has not received any benefits from the insurer for 3 years or more. So basically you have not been active on the claims, you have not realized that claims being provided. So LIC has this. So you have not collected your premiums, right? You have not collected your premiums. So premiums have not been collected. This means LIC now presently has unclaimed maturity amounts of 880.93 crores. Such premium payments by the policyholder which have not been collected, if they remain unclaimed for more than 10 years, remember, if such premiums they remain unclaimed for more than 10 years, they are transferred to the government's senior citizen welfare fund. Remember this feature. What if such premium remain unclaimed for 10 years? It will be transferred to the government's senior citizen welfare fund. I hope this is clear. We will be discussing today only up to banking news. From national and state news, I will be resuming in part 2 of this class tomorrow, right? So that is it for today. Now it's time for the top 5 MCQs in the short series. I hope you will be answering them. So first question in the short series. Recently, CBIC has introduced 4 initiatives to enhance the taxpayer service. Which of the following is not among them? Which of the following is not among them? Which of the following is not among them? बताइए. First question, what will be the correct answer? Anyone? So if you see which one is not among them, I have asked you. Revised Citizens Charter is there, Ease of Doing Business tab is there, Revamped Citizens Corner is there, CBIC archives are there. So all of them are there, hence none of the above will be the correct option. None of the above is not among them, right? All of the above are there. So E is the right answer. Next question. January 1, 2025, MFA will become mandatory for taxpayers with their aggregate annual turnover exceeding how many crores? From 1st January 2025, anyone? Tell me. We have discussed this thing, right? So the multi-factor authentication will be mandatory for companies having their annual aggregate turnover exceeding how many crores? From 1st January, it will be 20 crores, remember, right? Exceeding rupees 20 crores. A will be the correct answer. Next question. According to latest relaxation by SEBI for startups, now startups only need how much percent of their pre-issue capital to be held by the qualified investors to be listed on the IGP or the exchange dedicated to these startups and innovative companies. Only how much percent you will be required to have in the form of pre-issue capital to be held by the qualified investors to be listed on the IGP. So it will be 25%. Remember, C will be the correct option. Only 25% of the 25% of the pre-issue capital to be held by qualified investors, and you will be eligible to be listed on the IGP. Next question, question number 4. India has become, okay, so tell me anyway, this is going to come in the national news category. According to recent data and figures, India has become which number of the largest exporter of smartphones in the world? 4th, 3rd, 2nd, 1st. Which number of the largest exporters of smartphones in the world? So remember, India is 3rd largest. Remember this rank. India is 3rd largest exporter of the mobile phones in the world. Okay, smartphones. Then question number 5. This is also going to come in the national and state news category. We will be discussing tomorrow. So Ministry of Ayush has functional academic Ayush chairs with 5 countries. Okay, if you know this, you can tell me. With 5 countries, the Ministry of Ayush has its academic chairs. What does it mean? It means it has its chair, its professionals in these 5 countries who are promoting Ayush over there, educating people, making them aware of the Ayush methodology and medicine, right? So which of these countries, 5 countries are there? Question is, out of these countries, which is not there? Okay. Out of these countries, which is not there? So the correct option here would be Maldives. Maldives is not there. In place of Maldives, it will be your Malaysia. Okay, it will be Malaysia. So remember, Bangladesh, Australia, Mauritius, Latvia, and Malaysia. These are the 5 countries with which Ayush Ministry has its academic chair. Okay, remember these 5 names. It can be a probable area of question. So these were the questions from the top 5 series of short series for today. I hope all these technical news which we have discussed under regulatory bodies segment coming from SEBI are clear. I have tried and explaining you in the best possible manner. I hope you have understood all these concepts, right? So please keep on revising them, the facts and the concepts as well. Concepts are also important because this can be important for your descriptive portion, right? They ask you concepts based question. So in paper 2 or phase 2, conceptual clarity of these financial terms is also important. That's why it takes time to discuss them. I hope this class was useful for you. I'll see you all in the next part of it, part 2, to be held tomorrow. Till then, have a great day. Thank you so much.